Hello and welcome to BloombergQuint. My guest today is Rajesh Gopinathan, MD and CEO of TCS. Rajesh, thank you for joining us on BloombergQuint. To begin with, we saw a strong revenue jump, 7.2% in dollar terms in the second quarter. What is the kind of demand recovery that you're seeing as we go into the next few quarters?
Sajeet, as I mentioned yesterday also, we think that the demand momentum that is there should continue into the remaining half of the year and continue forward also because it is coming from a fundamental shift on the technology architecture side of it. So, leaving aside any unforeseen downturns due to either the health side or the economy side, I think from a technology imperative perspective, from a business imperative perspective, this uptick that we're seeing should sustain into the near and medium term.
Hmm. You know, there are some arguments about whether this demand or the recovery is real in that sense, because in the first quarter we saw a lot of businesses coming to a halt, and then it's a recovery which is coming, and that could be one of the reasons why many businesses are now going towards cloud, and that you saw in your order book as well. Do you see this recovery to be real? And what about uncertainties like macroeconomic, or maybe for that matter, health crisis, which is already going on? Because we won't be seeing that coming to an end very soon. It will take at least another 2 or 3 quarters for that health crisis to come to an end. So, do you see this recoveries for real?
That's what I just addressed. I thought, as I said, I am not commenting about the macroeconomics or the health side. I have said this before also that we are not out of the woods and we need to be very careful. But leaving that aside, when you look at it from what is the transformation imperative in front of businesses, it is very much on technology leverage and it cuts across industries. And the nature of technology leverage is highly differentiated. It is not a very widely available capability because it requires not just an understanding of the technology layers itself, which are new and which have demanded significant investment, which we have been doing ahead of the curve. It also demands equal understanding of the current estate, the current technology estate. So you need this balance of knowing what the current estate is, of knowing what the future architecture should be, and the ability to confidently migrate from one to the other in a efficient and most importantly a de-risked manner. And this is not a very what should I say, a secular capability, and we believe that it positions us in a highly differentiated way, and therefore we are confident that we should be able to participate in this opportunity significantly, and that is where the confidence on the whole demand recovery is coming from.
I also want you to dwell a little bit more on this new technology transformation cycle which you're talking about. From a company's point of view, how does it change the way they're going to spend on technology? Is it going to be incremental spends which are coming in, or is it going to be part of operating spend which is going to come in? And in that sense, will that bring in a bigger opportunity for the companies like you?
I do believe so. See, what is happening, Sajid, is that the technology that you're talking of has existed for many years now. But always new technologies face a big challenge that they compete against a fully depreciated technology stack. So if you take cloud, at its very basic level, the functionality that cloud delivers is not very different from a functionality that your existing infrastructure will deliver. It delivers security, it delivers higher resiliency, it delivers higher flexibility, but it's not easy to value that in a normal situation. So what this pandemic has done is it has done two things. One, it has put a value to that resilience because companies that had that infrastructure were up and running faster than those who were scrambling to find a way to survive this kind of a sudden shock. So suddenly the business value becomes a lot more apparent and the decision becomes easier. And that forces that jump. So it is that is what the pandemic has done. It has forced that jump. That jump itself lands you in a new space, which delivers resilience, but does not necessarily deliver further functionality. To get to the real future benefit of that new space, you need to be able to actually consume a lot of the new capabilities that are there. And the good thing is that that consumption can happen on an incremental basis. That is not a capex term. So once you have written off your old estate, once you are committed to the new estate, you have done that investment shift there. After that, it is a incremental investment, and that is easier for companies to consume. So that is where the this whole thesis of this multi-year technology transformation that I've been talking about, that's coming from that kind of that assessment of what we're seeing in our customer universe.
And so you're also seeing a trend of vendor consolidation also happening, going to quality service providers. Is that also a trend which you have seen in the quarter where companies want single vendors, so they're consolidating all and going to players who have that capability and with them and the entire suite of capabilities with them?
It is not just about single vendor per se. It is once again the value of operational excellence, the value of resilience, the value of quality tends to be underplayed when it is a very stable operating environment. Because the real value of quality comes when the road gets bumpy and there are twists and turns, and then is when you really start testing out what you have. So I think many of the things that we have always stood for, their value to our customers is a lot more visible now, and there is a lot more of acknowledgement of that, and that is why we are seeing this flight to quality that we are talking about, and that is the driver to this consolidation. Um,
I just wanted to get an idea of the client spending as well. If you look at client spending as a whole for the year, or maybe in the coming years, are you going to see a higher amount of client spending coming in because of this particular shift that has happened? Because traditionally it's been a very small percentage of client spending increase which we used to see in the last few years. But now that the shift has been forced upon, you see higher client spending coming in for multi years now.
I do believe so, Sajid, because if you think about what has changed on the transformation side, almost every aspect of change that has happened in any business has a very strong technology component underlying it. So, that is where it is. It is not that we have suddenly been given that the budgets have significantly increased. But when you just look around as to what is going on, everything is significantly more technology leveraged, and it is touching every industry and every value chain. So that's where the confidence comes from. What we are doing on our part is we are taking a forward call on that, and we are betting on that, both in terms of the investments we are doing to build on our intellectual assets. We are doubling down on our various key partnerships. We are investing in our people in terms of training and upskilling, etc. And we are also hiring to make sure that we are well positioned to satisfy the demand that we foresee. So that's our response to this opportunity that we think is coming.
Rajesh, I'm running out of time, so I have two quick questions. One is on the revenue part of it. I know you won't give guidance, but at the beginning of the year, you said that the normal is going to happen by the Q4 of this financial year. Do you think that the normal will be advanced because of the kind of momentum which you're seeing in demand? And the second one is on margins. You came up with stellar margins. 26.2%, which is the highest since Q2 of FY19. Do you see that trajectory of margin to be maintained going forward?
Sajid, again, I don't want to give a specific number. Margins will have an impact on because of the salary hikes that we have just announced, which would have typically, we would take it in Q1 and then work through it for Q4 quarters. Here we are kind of changing that around, so that impact will be there. But like Ramki mentioned in his discussions yesterday, in our business, margin is significantly linked to revenue growth. So if the revenue growth that we anticipate does materialize, that will also provide support to the margin side. and this is coming from investments that you have already made.
Hmm.
And so we are, I would say, reasonably confident that we should be able to enjoy good margins. But all of this is dependent on how it turns out during the next, in the near term.
Rajesh, my final question to you is on the agile part. You've been able to demonstrate that agile part where people can work from home and deliver from home. In such a scenario, you have headwinds coming in form of H1B and all. Does it really have any bearing on a company like you if you are moving towards agile? My question is that does H1B has any influence in that sense, because people are now moving to work from home, and you're also planning to do a large portion of your workforce to work from home. So, is it as important a factor today?
So we have been systematically reducing our dependency on any given single item, whether it be H1Bs or any given thing. So as part of our business model, that we make sure that we are not single point dependent on anything. Any jurisdictional change that increases cost will have impact. Anything that actually interferes with the supply of talent will have its own implications. So I wouldn't brush aside the implication of these changes that are currently being discussed and on the anvil. Neither would I be saying that this is, is the end of the world for us. So yes, they are material. We need to understand them well and design our responses accordingly. But in and of itself, we are confident that our ability to serve our customers and most importantly, our relative competitiveness does not reduce based on whatever changes we are seeing in the environment.
Rajesh, it was a pleasure talking to you this quarter. Thank you very much for joining us on BloombergQuint.
My pleasure, Sajid. Thank you.
Thank you.